own the large crypto that have proven network effect. Bitcoin, ETH, and Solana has come into that fray and has got provable network effects.
Ethereum, the second largest cryptocurrency by market capitalization, operates as an open source blockchain system featuring its native digital currency called ETH. By serving as a platform for various cryptocurrencies, Ethereum facilitates the execution of decentralized smart contracts. Solana, an open source initiative, leverages the decentralized nature of blockchain technology to provide cost-effective DeFi solutions with a focus on speed. While initial development of the project began in 2017, it was officially introduced to the crypto community when the Solana Foundation launched it in March 2020. In 2024 alone, Solana saw an impressive increase of almost 77%, catapulting it into the top 5. Top cryptocurrencies by market capitalization. This rise briefly propelled Solana to 4th place, overtaking Binance Coin (BNB), and it currently maintains 5th place ahead of Ripple's XRP and Cardano. Ethereum and Solana have had a very positive 2024, despite the brief correction we are currently seeing in the cryptocurrency market. Solana is up about 68%, while Ethereum is up about 50% in 2024 alone. This bodes well for altcoins and the cryptocurrency market as a whole, as these two tokens represent the two largest players in the altcoin category and smart contract platforms. In today's video, we will tell you Raoul Pal's view on Solana and Ethereum, as he says these two can make anyone a millionaire in 2024-25. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. This is all driven by the liquidity cycle. This is a macro cycle driven by public debt refinancing because everyone reset interest rates to 0 in 2008. They fixed all their public debt for 3 to 5 years. This gives us a 4-year cycle. That was exactly the point, the launch of Bitcoin. It is also the presidential election cycle in the United States. It's all the same. So this is all part of the recovery cycle and the debt refi cycle. Normally we only have 3 data points, but the crypto spring, which is the first year after the bear market, was strong. Bitcoin is up 150%. This is quite important because we have brought in an additional source of demand, as you mentioned, with ETFs. But in reality, it happened later. But hedge funds and participants were ahead. Crypto spring turns into crypto summer, and this usually happens after the halving. If we go back to 2020, after the halving, Ethereum and Bitcoin bottomed out, then started slowly stabilized, then started to outperform. This is when the market takes risks and exits the risk curve. And that's when you start to see Bitcoin dominance fall. All that kind of stuff. It's summer altcoin season. We have this new source of demand. This is the most thoughtful market ever created because the more people join the network, the more the price increases, the more it encourages people to join the network, and the more the price increases. And obviously this reflexivity works in reverse, which is why we have strong bear markets. But fundamentally, the world is underweighting this asset because it's still a new asset and it's an adoption curve. So over time, more and more people join the network as investors or users. We could see a second wave of panic in the Bitcoin ETF from people. This is what crypto summer is for. It's the FOMO, the madness that cryptocurrencies are becoming, but it also drives adoption and brings in venture capital money. It puts money into the system and allows people to create new products, which is the next profit cycle and all that. And then we move into fall, and therein lies the complications. The cryptocurrency crash, which historically will occur in 2025, usually ends at the end of the year. This summer is the easy part. You just sit there and do nothing. A number goes up. Fall is complicated. So if we go back to 2013, we had a 50% sale. People thought it was done because the amount had already increased 20 times or something. Then he corrected 50%. Everyone thought it was over, and then the moon rose in a way we can't understand. Then you get to 2017, the same 2017 everyone thought it was over at the beginning of the summer, and then it snowballed 10 times from there. It's really difficult to deal with because 2021 has been a delayed cycle. We never reached the final accelerated section. We had a big correction. He climbed up, looked up, and collapsed. Everyone suffered from PTSD. The real money was made in these two previous bull markets in terms of percentage return. Now everyone assumes that it can only rise 3 times from the all-time high. There is actually no evidence of this. Maybe something was strange about the last cycle because the others far exceeded all-time highs. Think of it as a distribution curve. That would be Bitcoin as a price target. Let's call it 200,000 or something like that. 3 times is the highest type of thing there is. There's a 20% chance that people will call this a leftward translated cycle. In other words, we are driving demand through the ETF. DRIED. We are outperforming at this stage of the cycle. People say they tend to follow a single cycle because they have only seen the last cycle because others have outperformed before. Anyway, okay, there's a 20% chance of that happening, and then there's a 20% chance of this turning into a real bubble cycle, 2013 to 2017. An Ethereum ETF is also added. Add to that the $65 billion in venture capital invested in the last round, and someone can come up with surprising applications. Before you know it, 200 million people are playing a game. Things like this happen. This could create something huge. Inflation is lagging. All heavy measures concerning inflation, rents, etc. are significantly shifted and should therefore continue to deflate. When we look at the trufflation index, it keeps falling. This game has not yet been played. But let's say it doesn't come back down to levels and they don't cut, or they cut a little bit because they have to finance the debt. This is the problem. This is what gold is smelling right now. How are they going to pay the interest on a debt at rates of 5.5%? It becomes a combination of new debt issues, and they will lose control of the bond market, which means they will have to control the yield curve, which would be like printing money. In reality, liquidity is the most important thing in the system. There are many ways to measure liquidity, but liquidity has increased global liquidity. Not by much, but enough to bottom out in crypto and everything else markets. And forward-looking indicators suggest liquidity continues to increase into the system and liquidity ceases, upwards flowing downwards, the risk curve, or acts as a debasement of fiat currency because it is a measure of global liquidity that optimally drives up asset prices. On the big cryptocurrency that has demonstrated network effects. Currently, there are only 3 with network effects that are fully tested. Bitcoin, Ethereum, and Solana have entered this fray and demonstrated network effects. Many other contain certain elements and slightly lower network effects. Put 90% of your assets there. They will rise well. If you make a basket with the same weight, you will do very well. Do not use leverage. Leverage is just a way to get you to withdraw your coins. Your only job is to not lose your coins. If you hold on to them longer, the more money you will make over time. So don't let anyone keep your coins. Staking is different. You have the currency risk and the bet, meaning your Ethereum goes down and your Solana goes down or whatever. But once you start renovating or doing different things, you take on a different market risk that you might have to park your parts in. Do this in your 10% bucket. Do not play. DeFi does that. It's the same thing that happened with all the centralized exchanges. What happened with everything is the other thing is self-custody. Worst case scenario, leaving Coinbase in the hands of the government monopoly. But at best, self-guarding. Do not park with your coins. Everyone is now experiencing it in crypto. Don't lose your coins. Debate about fiat money in general and why a global liquidity ratio is used, which is 8%, meaning that as central banks create more fiat money, the assets are optimally, particularly American assets because they are American dollars, the global reserve system. However, shares are not increasing. The rare fixed assets are increasing. Scarce assets therefore increase their salaries. Prices rise relative to earnings. That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.